So here for a Power Lunch exclusive is Mark Barrocas, the CEO of Sharkninja. He's joining us from the William Blair Growth Stock Conference out in Chicago. Mark, thank you very much for joining us here. I don't know if you heard any of what Courtney was just talking about with regard to the costs and the tariff kind of sensitivity or scenario analysis. Is this something that you guys do as an executive team at Sharkninja to kind of figure out what those scenarios could look like and what demand elasticity could be?
Well, yeah, I mean, thanks for having me. And we obviously are looking at this every day right now since tariffs have escalated and gone into effect since February. We're looking at everything on the buy side, on the sell side, trying to do everything we can to try to minimize price increases to consumers. But as you said, we've been working for the last 4.5 years to diversify our global supply chain. And I think, that was the right decision that we made 4.5 years ago.
If that's the case and you are diversifying, how long do you think it will take you for you to kind of get your operations to a point where you feel insulated as best you can from some of the China-U.S. trade war that's going on right now? Do you feel as though it's something that you can provide transparency or clarity on, not just from your own team, but for investors as well?
Well, look, obviously, as you said in the beginning, I mean, 90% of our U.S. production will be able to be made outside of China by the end of Q2 and virtually 100% by the end of this year. So we have to play the deck of cards that are handed to us. And at this point right now, we're diversified, all through Southeast Asia and a number of different countries. And we feel that, we've scaled up our manufacturing. Our quality coming out of those factories is very good. We have a large team of Sharkninja associates that are on the ground in those factories, working with our suppliers. And so we feel good at this point about what our global supply chain looks like.
So we were just talking about our various appliances, Mark. I've got a cordless Dyson that it's good, but I actually wish it were stronger. I've got a corded Shark that's lasted forever. This stuff runs the gamut. How much should we expect prices to actually go up this year?
Well, first of all, I mean, thanks for, commenting on your Shark vacuum that has lasted as long as it has. I mean, our business is built upon, market-leading innovation, great performance, great quality, and also at a great value. And, we sell in 37 different product categories. We sell in 26 different countries around the world. I mean, this year, nearly 40% of our business is going to be done outside of the U.S. So, we're looking at kind of how do we manage pricing and mix and assortment, not just in our U.S. business, but we're looking at it, how do we manage it all across the globe?
Right, and especially if you're moving from China to Vietnam, but then Vietnam gets hit, or maybe it's not going to, or I don't know if you move to India. So if you could just mention a few of those countries. Is it Mexico? Where are you sourcing from? And what happens with steel tariffs at this point?
Yeah, well, look, I mean, there isn't a lot of steel in our products. I mean, there is some, and obviously, those tariffs have impacted us. We're in countries like Thailand and Indonesia and Malaysia and Cambodia and Vietnam. And, we're looking at production in the United States. I mean, we've been having, significant ongoing discussions over the last couple of weeks as to which one of our products, or which one of our categories would be applicable to setting up manufacturing in the U.S. I mean, we've talked to, a number of different people around that. So, that is something that I think over the course of the next 90 days, we'll make some decisions on and really assess, are there some products that we can actually start moving back to the United States?